Welcome to the webinar. You have entered as an attendee in listen-only mode.
Please know that we will be sending you this video after the presentation. Okay, so a few minutes past 10 on my watch. We've got the room that's about half full, so I'm going to get this party started. Again, my name is Justin, co-owner here at FX Renew. I've also been coaching traders for a while. This year I'm going through professional certification. So instead of just being a coach by practice, I'll actually have a certification to put on my business card for whatever that's worth. Let's just get through the disclaimer. Trading foreign exchange carries a high level of risk and may not be suitable for all investors. The high degree of leverage available can magnify your profits as well as losses. You can lose more than your initial deposit, so before trading, please carefully consider the risks and costs and seek independent advice as required. Please contact us to discuss any questions or concerns you may have because we are here to help. All right, so here's our revised agenda for today. I'm going to be going through our little special surprise I have for you first, and then we'll go through what trading is, the case studies, the big issue, trader assessment, some thoughts of mine on how to gain longevity in this business, and some final thoughts. The initial tone setter for this whole webinar, even from last time, was this phrase from Zig Ziglar: you can have whatever you want in life if you'll just help other people obtain what they want. I've learned that even in trading, the more you help others, the more you help others get ahead, the more you help them overcome their issues and network with traders, the better you become as a trader, because you have to understand how you can actually teach what you know and try and understand what the other person is really saying and what they're seeing, what's going on. It helps you become better at the same time, but also generates a relationship of trust. And I wouldn't be where I am if I hadn't found other professionals willing to help me. And that's the same for just about anything on the face of this earth, from ballroom dancing to baking bread. Without a mentor, without somebody that will actually help you move forward and overcome some of the common errors, the issues that are at the beginning of the learning curve and get you on the right path, it's tough to get anywhere. So don't think that trading is about sitting behind your desk doing your own thing in privacy. Okay, trading is about networking and finding talented traders and like-minded traders, groups of people that you can bounce ideas off of, that you can learn from, and that are potentially better than you, so that you can actually learn from them and get on a path, because our brain loves to have a clear path that it can follow to obtain its objective. So, and this is the same in business as well. The more people you can help, then tendentially the better you'll be in business. So let me just scroll down to our surprise, and then we'll go through all this. There's quite a handful there for you. So, a little introduction on FX Renew. As you can see, our team just keeps on growing. We're picking up new members all the time. So, as you know, Sam is the founder. Then there's me, and then there's our colleagues from 3C Analysis, Steve and Alan, and they run the active trader signals. Then there's our in-house programmer, Tony, And then there is PTM and Sash and Vase. You might remember them from a couple of webinars that we did in 2018. And they are both running our news platform, The Dealing Room. And they're also involved in a project, as well as Tony. They're involved in two separate projects that I am working on to bring forth hopefully some useful trading products that you'll like. We're working on an auto signals product that we hope to roll out sometime in the second half of 2019, and we're working on and also a big signals portfolio with diversified systems in it. So we got some stuff cooking for you in the background, and the team just keeps growing. So this goes to show that we're never steady. We're always moving forward here. So what does Affectionate bring to you? The signal programs, so you can actually see how we trade, understand why we trade the way we trade, and you can interact and you can see it. This is our view of immersion. And then we have the System Development Workshop, which is where, through interaction with me, you can build a consistent trading system and you can get support, because we have a forum, a dedicated forum, where as you go through the structured lessons and the videos, you will get feedback on your coursework and you'll get tips. And that's where I'm active as well, trying to understand what people are doing right, what they're doing wrong, and trying to guide them. Then we have the trading skills courses, the technical analysis one, the fundamental analysis one, and the position sizing. Then there's my coaching. Tendentially, I can get people consistent in 3 months. That depends on whether they pass my initial assessment or not. And then there's the Dealing Room, which is our news platform, and this is free for anybody who enrolls in the Affectionate pathway. This is our signals portfolio. I actually have to update this because now we're into June. We've come back up a little bit. This is an example of a London Open signal. So you can see we always give you exactly what we're trading, how much we're trading, stop loss price, the entry, the profit targets, time frame, a comment, and some charts to explain everything. This is a typical news flow trade. So I'm in charge of the news flow trades, and we target the key news events each week. Typical analysis is what's due, what's consensus, and what does our analysis allow us to expect for the data, and then what are the trade scenarios? What are we looking to trade, and what could happen? This is a typical end of day trade example, where you have always a chart showing the kind of trade, and you have a lengthy email explaining the process. Sam sends those out once a week. And then we have the on-demand video workshop, how to build a consistent Forex trading system. This is our flagship education product, and I'm currently helping a few people go through it. You can start this at any time. It's always available. It's on demand, and I'm always there to help you in the forum. So how does the workshop work? That's a tongue twister. How many times does the workshop work? The workshop is an on-demand format. It can be started at any time. You can progress through it at your own pace. So it can be around your day job. You can do it on weekends, whenever you feel like it. Just complete the coursework and submit your worksheets for feedback. And then you engage with us on the forum, in the trading tribe, and build your system and grow it gradually. Here are the lessons. So there are 5 steps to selecting your trader type, the components of a winning trading system, fitting your system to the market type, achieving your goals through position sizing, and then you have a series of traders that are showing you how they act, and prop trader techniques with Jim Langlands. Then there's professional day trading with Steve Lucas, hedge fund techniques with Triple Eight, global macro currency trading with Sam, trading around a full-time job with Joe Papa. Then there's a technical analysis lesson from Alan, and then you have the scientific system development process and the skill of adaptive trading with Sam. The Heart of Discipline, trading the Lion's Den, again, that's with Sam. Boy Scout trading, being on the safe side, that's with me. And then how I doubled my account in 6 months with David Villagra. We actually have some other videos from contacts of mine, which are in there. I think we're up to 17 or 18 right now. So just dig into it. Private coaching, working side by side with me. I just put a bit of feedback in here, but if you're at all interested, all you have to do is just go onto the coaching page and or send me an email and ask for details. It's quite simple. I'll just skip through this. The Fundamentals Mastery Course. I made this so that you could understand the reasons why markets move, identify and side with market sentiment, and exploit the key market movers. So here's the content of the course. Initially, the introduction is challenging common beliefs about fundamentals. Then we have session 1, what is fundamental analysis? How does the world really work? What does this mean for traders? And then we have session 2, what is the role of and responsibility of central banks and governments? How do they affect the markets? Session 3, how do economic performance measures influence the market? Session 4, how to guesstimate economic indicator releases. So we're getting into a bit of news trading style here. Session 5, what is market sentiment and how can we follow it? Session 6, how to trade with sentiment on your side. And session 7, how to be a successful trader, and concluding remarks. Then we have our position sizing course, where you can learn how to size your positions in a professional way in order to limit your downside and expose your account to large gains. So we have the percent of equity, the 210 algorithm, the 225 algorithm, 515 swing algorithm, the scale and simple, and then we have the simple swing signals algorithm. This is ideal for our signals. And the core capital protection, the scale and advanced is coming soon. The technical analysis training course. Now, this was done by our colleague Alan Collins, who was a member of the Society of Technical Analysts, a market veteran for more than 30 years. What I like about this course, I'm not a fan of technical analysis, but what I like about this course is that it gives you the only essential ingredients that I think you'll ever need to build a solid foundation. And they are the only ingredients that that Alan and Steve use in their analysis. So if they use it and it works for them and their analysis is purchased by institutionals, then why shouldn't it work for you? So, introduction, typical candlesticks and particular candlestick formations. This isn't usual textbook stuff. There's a bit more into this because it's tied to trading. Continuation candlesticks, Marabuzzo candlesticks, then the simple trend series, moving averages and trend lines. Very simple stuff, but very key. Joining FX Renew. So since you came to our webinar last time and experienced technical issues, and since you're coming back today to listen to me yap away again, we are offering you a 70% discount from normal annual prices with a 7-day money-back guarantee. So you can join FX Renew for 319 Australian dollars per month. That's what we're offering you right now for coming to this webinar. So when you join, you get, of course, full access to the dealing room, to the signals program, to the workshop, all our courses, and everything else. You can see feedback from members on our feedback page, fxrenew.com/feedback-about-fxrenew. And then the special offer will be on this page here, fxrenew.com/webinar-offer. So all this will be emailed to you after the webinar today, so you don't have to take notes or write it down. It will be sent to you, but if you want to visit the page right away and book your spot, then all you have to do is just write this down in your browser, and it should take you to the webinar page. That is the special offer that we are extending out to you today, and I wanted to do this just in case the technology does not hold up again today. So let's go back to the presentation now. Okay. So I'm going to go through this very quickly because I went through it last time, and probably most of you have heard this before, so I'm just going to skip through this. Trading is a competitive business endeavor. Why? Because it is a performance, it's like a performance sport. we're always performing. Each day, we need to be at our best. Even if you're programming an algo, you still can't let the algo run with your being blindfolded. You need to be there assessing market conditions and making sure the algo is acting appropriately. Okay, so even algo traders need to have their wits about them. And this means that you have to be in shape, and you have to be focused, disciplined, and all that. It is a performance that you're creating, and it is a job that is based purely on your performance. So it's competitive. It's a competitive environment. You're also an entrepreneur. You need to have an entrepreneurial mindset. So you have to understand, what do you have an edge? Do you have enough risk capital for your startup? Do you have enough notions about risk management? Do you have a backup plan in case trading doesn't work? Give yourself a year, maximum give yourself 2 years to see if you can make this thing work. But if you can't, you need to have a backup plan. You don't remain stuck and glued to this, and don't chase the chimera your whole life without actually seeing any fruit. Trading requires passion, just like any athlete has passion for what he does, because athletes train harder than any normal individual, and they're usually in pain because they push their bodies so much. And trading is difficult, and it's painful, and it goes against our normal human impulses. So it requires passion to be resilient, to continue doing this day after day, and work your way out of drawdowns. You have to have the right processes, and you can learn these from us here at FX New, or from other traders you can emulate that work the way you work the way you work. And it requires having the right mindset. So most traders, as I was saying last time, they lack either passion and interest for the markets or for trading, and that leads to consequences. Or they lack the right mindset, and that leads to consequences. There's a difference between having an objective, I want to be a great trader, and having a process for reaching that objective, which could be, what am I going to do each and every day to become a great trader? A lot of people love the idea of being a great trader and making money, but not too many people that I've seen actually enjoy the day-to-day and what's involved with that. So be sure that you're actually interested in it. Here's the first case study from last time. Long story short, this trader was doing fine, growing his account steadily, and then all of a sudden things got boring. He increased his position size, blew his profits out of the park, but then sank like the Titanic. Why does this happen? His typical comments when we talked were, I need to make money from my trading, and trading with small amounts is just getting me nowhere. Also, so much work for just so little gain. And also, his focus was all on the money. What I'd like to remind you about this, and it's a common denominator that we'll be talking about today, is it really is ego. So there are some incorrect thought processes here. So the first thing is, I need to make money from my trading. I've written so many blog posts, and I've talked about this. We at FX New, we try to bring the professional world to the retail world. We try to illustrate how things really are, what reality is. There are so many lies that are spewed out in the retail world. You can make billions trading. You can transform a $50 account into a $10,000 account and then scale it up and trade millions. That's not how this thing works. It's a bad trade. To trade your own money is a bad idea. What you do is you take your account, and if you're interested and passionate about the markets, then you find somebody who's been there and done that. It could be us at FX New. It could be somebody else that trades the way you trade. It doesn't matter. Find somebody who's been there and done that, and ask them for help. Find somebody that will help you understand and learn how to trade. Then you trade on a demo until you can gain an edge, until you're consistent. Once you have proof, move to a live account. Now, this process will probably take anywhere between 6 to 8 months. Trade a live account and grow your account slowly for a period of 12 months. Okay, if you can do this and focus on the percentage gains and being consistent and limiting your drawdowns, the most important thing, then we can find ways. And we at FXRenew, we're tied to a funding partner who funds traders. And we've fortunately, they've been interested enough in this process that we structured that they're also opening up the retail side again. Up to now, they've only been funding professional traders, so traders that would fall that either have a very large capital base, or they worked in the industry, or they trade sizable positions. But now this whole thing has become interesting to them, and they are now opening up to the retail side. So, we do have a channel open for you. If you're consistent, if you can prove it, just come to us. And if you need to learn and you want to do this anyway, it is a 2 to 3 year program, but it's there, it's tangible, it's realistic. That's how you start making money from your trading. You trade other people's money. You grow your own account, you prove that you can do it, and then scale it up, trade other people's money. Because you make, that's how you can make your money in a risk-free way. That's how you can actually start scaling up your trading business in a realistic fashion. Okay, so anyway, that's what was wrong with the first mindset here. So much work for so little gain. The trader was focusing on the money, not the process. Okay, his percentage gains were actually phenomenal. Doing 2 to 3% per week sometimes for a period of months is just fantastic. It's not about the money, it's about the percentage gains. If you can do that on your own account, you should be able to do that on a larger account if you think in terms of percentages and not about the money. So this is what we went through. Case study number 2. This trader came to me being profitable. He was already profitable, and you can see that gross profit, but then you see the gross loss, and net profit was this much. So he was profitable, but he had big swings in his equity. Maximal drawdown was 40%. His short and long positions, they were pretty good. This looked like a trader that was really trying, and he had something going for him. But then I went and I checked his actual trade blotter to see what kind of activity he was doing, and I saw this. These are all trades taken the same day. Huge size compared to his account size. Okay, and if you look at the entries and the exits, they are scalps. These were all very short-term scalps taken on the DAX, and it worked for him, but I was curious to see what was going on there. So I took a look at the DAX during the section that he was profitable in. The DAX was in a very clear uptrend. So you buy the DAX, you hold on, or you scalp it. Tendentially you're going to be profitable because the market is generally in an uptrend. But then what happened? So he brought this to me, and he was profitable. And then after that season, he brought this to me, and he said, but now I'm having trouble. I want to know if my trading is robust, if I can become consistent, if I have problems or not. And things started to smell a little fishy. So what changed? The markets turned, and instead of being in a clear trending mode, they started chopping around, and the traders started experiencing problems. So it started becoming obvious that it wasn't, that there was a bit of luck in his profitability, but there was also something there to work on. So I worked with this trader, and I coached him. And here's what we worked on: mindfulness, detaching from the day job, allowing his frustrations to come out, allowing them to exist, but being mindful of the triggers, being careful not to judge the triggers, not judging himself, just letting it go and seeking peace, managing his expectations. So, once again, this trader had the same kind of mindset. I've got to make tons of money for my trading, and I let him know that the objective should be to trade other people's money. Position sizing, we had to scale it way back to bring it back in line with his account size, so that he wouldn't be risking his life on each single trade. Reducing trade frequency by enhancing trade quality. So, only take high quality trades, and that obviously reduces the frequency because they don't come around each and every day. Keep getting feedback for improvement. focusing on the process at all times, not on the money, not on ego, not on wanting to win or showing off, and being consistent and professional at all times. So these were his numbers before coaching from that MT4 statement. This is from the statement after coaching. You can see that the improvement was, for lack of a better word, was incredible. I mean, it's not the overall profit that we're looking at. It is, the fact that his maximum drawdown was 3% after the coaching against 39% before. Okay, this is a lot easier to trade something that only has a max drawdown of 3%. It's a lot emotional. It's emotionally much easier to trade this and easier to fund it if you're a funding partner. Average win much larger than the average loss. Maximum win much larger than the maximum loss. And notice that the win percentage was lower, but that didn't have anything to do with the actual end result. But then he came back to me in 2019, throwing his constraints to the wind, and he went back to the old habits. So what's going on here? Pressure to perform. Unfortunately, he lost his job in December, but he found a new job in January. So going through that transition is difficult for sure. But he took it out on his trading. He wasn't able to be conscious of this and say, okay, well, I'm not really in the best mindset for trading right now. Maybe I should let this be and pick it up again when I'm stable. This is just showing everybody how much your personal situation and having a certain stability in your life can influence your trading. Trading is about risk, and you can't risk if you don't feel in a safe place initially. Then the guy also had an ideal of himself as being a successful trader. When he brought me his track record, his initial track record that it was successful, the guy had preconceived ideas of what was right and what worked, and he wasn't able to shake them off, even though his results after coaching showed something different. He didn't filter that. It didn't register. And you can't really convince a person to see something differently until he's ready. So constraints coming back. Let me just skip through this because we said it last time. This is the interesting thing. When we had coaching more recently after his more recent problems, he came back, and this is what he himself identified as things to work on. Trade smaller positions, take longer term trades with the flow of the market, reduce the frequency of trades by allocating a percentage of the funds to the idea, trade in quiet times on the morning, keep getting feedback for improvement, graduate to increase positions and earn the right to trade bigger, remove the memory of previous trades as future trades are independent and treated in the moment. Have patience with positions as big moves take time to develop. Be consistent and professional at all times. More or less the same things we were working on from the start. So we're going around in circles. Why? It's ego. Unwilling to accept that certain constraints that we worked on together were working. Unwilling to admit past mistakes and question his own beliefs. So it's ego. I'm just going to give you I'm going to just direct you to a blog post that I wrote about case study 3. I wrote a blog post a time ago called the reality about financial freedom from trading. Go and look that up because that will give you everything that's in case study number 3. Case study number 4. This is where we left off last time, where I think the technology failed. So before I just dig into this, I have a couple of questions. I have a feeling there is no chance to even win $1. No. So Kadir is saying, I have the feeling there is no chance to even win $1. I would ask you to qualify why you have that feeling, what's giving you that feeling, because evidently it's not true. This is a job, so there are ways to work the markets, and it's not, it's not gambling. It is from a certain point of view gambling because there is a certain degree of numbers and casino math that's involved, but there's a process that can work for you. So, where's this feeling coming from? And what can we do to work on it? And then Jake is saying, what are your thoughts on starting off with a live account with small lots? Surely demo account would not cause the same emotions as a real risk. This can be personal. This is true. It can be personal. I personally started, since I'm a very conservative person, I didn't need to go on a live account. My idea was I shouldn't be risking real money, even if they're peanuts. I shouldn't be risking them because I shouldn't be concerned with money or with profits until I have a process that I've studied that actually works. And I need to prove that process over a period of months and different market conditions. So I did the first couple of years all on demo while I was studying. I'd study, test, fail, study, test, fail, try to learn, study, test, fail, get help, study, test, learn, etc. So this is what I did, and that's what worked for me. Because you shouldn't be trying to stir up the emotions. You don't have to dominate your emotions. Okay, they should be kept in check because you have confidence. Confidence, the ability to maintain your calm and the ability to have peaceful trading, comes from competence. If you don't have cold hard data, statistics that show that you have an edge, you shouldn't be trading. Period. So you need to do that first step. You need to do the testing, you need to do the studying, you need to know what you're doing in the markets. And usually that will take care of any of those, emotions of fear or uncertainty, etc., because you've got a process that you've studied and it's yours. Okay, and you can work it. And then the transition from the demo account to the live account should be seamless, because nowadays demos really accurately reflect live conditions. So that's what I would say about trading a live account, even if it's small. I see no reason to. I don't know if I gave you a good enough answer there, Jake, but you can also write again if you have another question. So Kadir, if you can't understand which way the market's going, if you're losing trades, etc., the only thing I can suggest there is to just come to our workshop. I mean, you need to learn a system. Evidently, what you're doing right now isn't working. So get in touch with us and let's find out what isn't working. let's make it work. It's a simple thing to do. So Arthur's saying, I'm so scared when things go well. I can't manage it. So Arthur is talking about the flip side of the coin. Usually we talk about losses. Well, what about profits? I guarantee you that what Arthur is saying is true. It is much more difficult to hold on to a winning position than it is to hold on to a losing position. We can cut our losses. We're usually good at cutting our losses, but are we good at holding on to winners, especially the ones that really do, move through the handles? When your chart starts to auto scroll and it's going into fresh territory. Everybody starts looking at their P&L, and that's a mistake there. You look at your P&L and you forget about the process. So it does go back to the process, Arthur. It is, the process is what should help you manage your trades when they're in profit. The process is what should help you remain focused on taking, one good trade after another. Why I called my session in the workshop Boy Scout trading is because it's a very, I believe in defense before offense. So my trading is all about only taking the best trades, the ones that are really sticking out like a sore thumb based on whatever method you have. And I wait for them patiently, and I only take those, and I take one at a time. Sometimes I'll have a couple of positions running, but I don't really have a bundle of positions running at any given time. But I let each one of them, stand on its own. I don't look at my equity curve, because at the end of the day, I'm I should always be my best. This is a performance discipline. What happened yesterday, what happened last month, the equity curve that brought you here won't get you to the future. The equity curve that brought you here, it means that you've done something. If it's a upward sloping curve, if you've done well, then that shows what you are capable of. But you have to maintain that consistency each and every day that you step up to the plate to take a swing. So, what happened, your equity curve, your past equity curve is history. And that's why everybody says, past performance is not indicative of future results. Because if I followed a process up to yesterday, and then today I stop doing that and I do something else, then my results will be radically different. That's not what people want. When people fund you, when people give you money to trade, they want to know that what you've done before is an actual process that can be demonstrated, it can be explained, it can be measured, and that you will be able to maintain that process for X number of years going forward. That's the longevity part, and we'll talk about longevity in a bit. So that's the thing. It's all about the process. I hope that helps, Arthur. So Kadir, write me again, but these are questions that I can't tackle here in the webinar. Just write me again, okay? But there are certain steps that need to be taken. Do we offer funded accounts? What do you mean by funded accounts, Abdul Hadi? Maybe you're talking about something like a prop trading setup, like where we give you the house money to trade. Okay, so we're not set up like a prop trading fund. We don't believe in that format. Most prop shops, they say, okay, you pay for the seat, you pay for the chair, and we give you our money to trade, and you have really tight risk limits. Typically, prop shops like high frequency trading, they don't like you to hold positions over the weekend. They don't like you to have drawdowns that are beyond 2% or if that much. I mean, they have really tight risk limits. You can't hold your positions through tier 2 news events, etc., etc. We don't work that way because those constraints they're geared towards making you scalp, making you short-term trade. Now, I don't believe in that. We don't believe in that. We believe in giving you as much flexibility as you need to exploit your system. So what we do is different. We will help you, through our education programs. If you need education, we will help you build a system, or through coaching, I'll help you build a system. You will need to trade that system on your own for a year, and this answers the other question. For 12 months, anywhere between 8 and 12 months, on your own account, whatever size it is, it doesn't matter. Whatever size it is, trade your own account consistently with low drawdowns. Following that, and you remain in touch with us during this whole process, and you grow the account slowly with whatever account you have. If you can do that, then we will fund you. We will find a way. If your account is too small, if it's not really eligible for a funding partner, so if it's just a couple of $1,000 or something, then we might set up something through FX Renew, and you might become either like a signal provider for us for a period, or like an auto signals provider, something like that. You would trade through FX Renew first, so we can help you scale up your account size, and then we will with that track record there, you'll be able to approach our funding partners. So that would be a two-step process. For people that have larger accounts, so anywhere from 20,000 upwards, they have a direct route towards a funding partner. They don't have to trade through FX Renew first. But anybody who's starting out, who has a really small account, there are two steps. Anybody who has a larger account has a direct route. through us towards our funding partners. And we just know that we will ask questions. We'll have to see your track record. We'll have to talk to you. We have to do a bit of due diligence because this is no joke. I mean, we're involved in your future. We're invested in your future careers as traders. We're not invested in in anything else really. I'm as a coach, I'm interested in your success. I'm not interested in anything else really. So get involved. Just try it out. This is the way forward. So Cedric, do you teach a specific system for each market type, or do we have to find our own? Oh, sure. We have a series of methods that we use. In coaching, what happens is, if I'm not coaching, I'm mentoring. I can mentor you. I can show you what I do, but it doesn't really fit everyone. Some people are wired differently. Some people are more analytical, and some people are more intuitive. So I can give you the instruments, and I can help you try and find the way you like to put the pieces together. But we do have suggestions. I mean, we give you the truth. What I like to give people, I like the Bible says, I'm a Christian, so the Bible says, learn the truth, and the truth will set you free. So I teach you the truth about how the market moves and works, at least what I know to be the truth from my experience, from people that I've spoken to. So how does the market move? What do people focus on? How do professionals view the markets? What are the dynamics that typically retail traders don't pick up? And what are the typical flaws that retail traders bring with them? I can show you all of this, and I can lead you towards how to put the pieces together in a way that suits your personality. And we'll go through a personality test, and we'll investigate that and do a bit of that stuff. This is how you can work through coaching, and through the workshop. You get, it's with the workshop, it's not one-on-one directly. It's only one-on-one in the forum where I respond to your emails. But the videos that we have are from a number of traders, and they each show you their own system, so you can pick up from them bits and pieces of information as well. We have a bundle of information in there, and I'm convinced that 80% of the people just don't go through the whole workshop, and they don't explore everything and see everything that we've got in there for you. So. Do you have a limited amount of pairs you're covering? Seeing many pairs? Yeah, Rotem. So Rotem is saying there are so many Forex pairs. Which ones do I choose to trade? The best answer is you trade the pairs that are presenting the opportunities that you like to exploit. If you're a trend trader, for example, only select the pairs that are trending at any given moment in time. If you're a news trader, then you only focus on the pairs where there's some news. You filter. Don't skim through charts looking for setups. Filter initially. The top-down process that we go through at FX is we have sentiment filter, market type heat map, and then there are some additional considerations. So like momentum and setup, etc. So sentiment filter. What's the market focused on? I'm just speaking broadly. What is the market focused on? What is the market interested in? What are the currency pairs that they're being focused on? So today it's the U.S. dollar, and equity markets as well, because we've got Fed Chair Powell who's going to testify today and tomorrow. That's the big risk event of the week. Markets are probably going to take cues from that. So the dollar, then heat map. Is the dollar doing anything interesting? Well, up to now the dollar isn't really doing much. It's strengthening, but whatever happens is going to be influential. Is going to be influenced by today's events, today and tomorrow. So then we go on to dollar. So then we're focusing on dollar pairs, and we discard everything else, because here and now that's what's in vogue. But more in general, you have to have a process that will allow you to automatically filter out the signal. What's being focused on. What's in vogue, what are the themes, which currency pairs are moving well, and you're discarding everything else. So you have a filter. Which broker must we choose? I can't, right now I'm not immediately at the liberty to say, but we will have a suggestion for you in the near future. We're going through a transition right now. In order to become partners, to become funding partners, we've had to move out of our independence, our being independent from brokers and stuff like that, because we are teaming up with one. So I will come back to you with this. The general rule for brokers is that you want to see that they have a strong capitalization. You want to know what their policy is for confronting issues, because when everything goes fine, everything goes fine. Every broker seems the same. It's when things go wrong that you need to have a broker that's trustworthy, that has a proven process for resolving complaints and issues and slippage and stuff like that. So those are the two things that you can look for. But come back to me with that question in September, and I'll probably have a suggestion that I can give you. Otherwise, you can go on to the CFTC website, and you just look for the brokers that have the better capitalizations, and then you can run through them and contact them and ask them what their policies are for resolving issues. And of course, it's better to deal with ECNs and people that don't have a dealing desk. Okay, I think I've answered all the questions. All right, guys, I'm going to stop with the questions for a moment. Yeah, I have Arthur here, who is a former coaching student of mine, and he's he wants to. He's saying how happy he was, etc. We don't need to go through this, Arthur. I thank you, but I don't. This isn't about publicity for coaching. This is about helping people. So I thank you very much, but it's not necessary. So when the coach screws up, this is where we left off last time. I'm not perfect. Nobody's perfect. We all screw up. The important thing is that we learn from our mistakes and that we move on. That we get a sense of humor, and we can move past these things. So this is the equity curve of a former student of mine. We're still working together, actually, just in a different context. And as you can see, everything was going great, and then he started falling off a cliff. So when this started, the questions to ask yourself are: is it the system? Is the system broken? And that's fairly easy to answer, because if you've done your back testing, as this trader had, he had done his back testing over the course of 5 or 6 years on a variety of instruments, and he dedicated over 400 hours of study to this. So, the system wasn't broken. Is it the market? Yes, the market was changing. Market conditions were changing a little bit, but in his back testing, it hadn't really impacted his trading that much. Is it me? And this was the big one. So yes, it was the trader, but it was also the coach deviating the trader from his best trading. Because this is what we went through, which I thought was normal, right? Okay, so what's happening? What are you doing? What are you going through? What solutions can we explore to get you out of this big drawdown here? And this sort of opens up Pandora's box into problems, into deviations from the plan, additional exploration, and some of that is fine. I mean, exploring other time frames, exploring other solutions, making sure that the market type is adequate, looking for additional filters without complicating things too much. A bit of that is fine, but what it ended up doing in this trader's case is deviating from what he did best. So I have learned as a coach that the first question to ask is, what were you doing back here? And are you still doing it? Because back here, there was a series of good habits that the trader was doing, both personally and in terms of his process. So the first thing is to make sure that he's still doing them. And the answer to that would have been no. There had been deviations from the plan. And we continued to deviate from the plan because I started opening up Pandora's box. Okay? So the way to get back on plan, to get back on track, is to get back into the plan. And and do what was working before. The trader went back and he was doing some tests. He's now understood that the emotions that first he was trading off of daily time frames. So he didn't have many setups, and the emotions that holding his trades were generating were screwing up his trading a little bit. It was making it very difficult for him to hold his trades and to fruition. So he did take on board the exploration of smaller time frames and applying his same setup to smaller time frames. He's looking at that right now. He's studying it, but at the same time, he can't ignore the fact that the daily setups were working. So this is a case where we're sorting out the interior issues, the emotional issues of what the system puts you through while working the system anyway. And there are contingencies to take on board when you go through these issues. Now we work through these in coaching, but I wanted to go through this because this is an example of when the coach can screw up. So what have I done to make sure that I don't go through this again? Well, I've enrolled in a professional coaching course, so now I'm going to add professional coaching from a very niche professional coach to all my trading experience. And so, giving you guarantees that going forward I should be better than I am right now. Case study number 5. Now, this wasn't in the previous presentation. This popped into my head this morning, and I revised the presentation. These issues, now we've talked about retail traders up to now, but these issues do not affect retail traders alone. This example right now comes from a very experienced dealer. Okay, he was in an Italian bank, but from the 1980s to the year 2000 when all the dealing desks were closed, and he was on the dollar desk, so a very challenging position. And he'd also become an experienced money manager after that. So the guy knows his way around markets. And I was in touch with him because he was a client of mine when I was a broker. And he lived not too far away. So, I got to know the guy personally, etc. And we were talking each and every day during the first few years of my career. So you say, well, a guy like that, what can go wrong? What can possibly go wrong with a guy that has this much experience? Well, I'll tell you what can go wrong. Thinking that he can be right all the time. This is a weekly chart of dollar Swiss. I've drawn some lines to show you just the breakout pullback scenarios that were very evident in that downtrend, and let's just focus on this nice little little ladder, the stair-stepping process that went down from 2010 through 2011. Now, we were in touch each and every day, okay? And this guy, you would think that he would follow the trend, but he was convinced. He was utterly convinced that dollar Swiss was mispriced. Now, the thing to understand here is that historically speaking and fundamentally speaking, he may even have been right, but the markets and the current pricing is what is right. This is reality. Reality is that we were in a downtrend, and the downtrend was continuing, and there was no letting up. Okay, and he was fighting this, and he was fighting it strongly, and he was adding to his counter-trend positions. And there was nothing I could say, because I was the junior at that point. There's nothing I could say to change his mind. He just wouldn't stare reality in the face. And what was really awkward to me was that this guy was a genius at scalping dollar Canada. He had like a 90% win rate with a favorable risk-reward ratio on dollar Canada. And I tried to learn that way of trading, but it doesn't work for me. But this guy was a genius at doing it because he had gained that much experience being on the dollar desk, and it worked for him. So, he could scalp 20 pips in and out various times a day. But he, at the same time, this longer term position here on dollar Swiss, it was just continued to go against him, eating up all those profits he was making with his profitable trading. So, something is really wrong here. And this is the thing that professionals can fall into. Their experience can lead them to believe that their convictions are correct, when reality is that the market is correct. The market is smarter than any one of us, and we need to obey that. If we have an idea, a preconceived idea, or an idea based on fact, or an idea based on a very particular analysis that few others have, or something, an idea that you think has an edge, just wait till the market starts to move in that direction, and then load up. But no, this guy kept fighting it and fighting it and fighting it. Now, the funny thing is that most retail traders do exactly the same thing, and they fade trends. So what I was seeing there was typical retail trader mentality, fading trends. The thing has to turn around, and it doesn't. So his entire trading account was blown out on this spike right before the reversal. What did he say to me exactly the next day? You see, it took me all out. It wiped me clean, and then it reverses. So typical. This is all a fabrication in his mind. People that talk like this are fabricating a reality that doesn't exist. The reality is you were fighting the market all the way down, and based on your own ideas. And now that it's reversing, you're telling yourself, now that it's reversing and you no longer have skin in the game, you're telling yourself something else. So learn from this. Okay. What is the big issue here? The commonality between the retail traders and the professional. Let me just have a sip of water and then I'll tell you. Ego. Ego is the big issue. So what is ego? Imagine yourself as being an apple, a red, juicy apple. The ego is the red skin that is around you as a shell, and it likes to be nice and shiny. But the real you is the white part, the juicy part that's inside. Your ego is who you believe you should appear to be to others. Nancy, don't worry, this will be recorded, and we'll be sending this out soon. Thank you for coming. So going back to this, your ego is the image that you want to portray to others. Okay, it includes your performance, how you compare to others, and it takes on the defensive when you get criticized. Your ego will bring forth the negative emotions such as anger, shame, envy, pride, all the dark side of the force. And Master Yoda would be very angry if you were to act out of ego. The real you, instead, is your consciousness. Okay, you can, if when you tap into your consciousness, you can actually watch your ego go wild. There's a situation, a guy cuts you off in traffic, or to make it trading relevant, you see the market hit your stop loss and immediately reverse. So your ego is that part of you that will start to throw a tantrum. Your consciousness can detach itself from that and actually watch that in action. But you can actually decide not to let a single word or action manifest itself, because you can talk to your ego and let it know there's nothing to fear. Nothing's wrong. Your consciousness brings forth emotions such as peace, truth, and love, and they will help you. They will help you in your life as well as in trading, because we face these things in life as well. So here's a quiz for you to let you know, to understand whether you're being driven by ego, whether you might have ego issues in some aspect of your life, and then we'll see what to do about it. So, question 1, do you find yourself wishing that you had other people's lives, other people's appearances, or property? Okay, your ego might think that you have to look better or have more to prove your value. Okay, this is, of course, something that we need to avoid. Do you like to prove your point and make sure that people hear you out rather than listen? And one of the famous sayings I like to counter this is, we have 2 ears and 1 mouth, which means that we should listen twice as much as we speak. And that's why I have a fiance who is much more loquacious than myself. Are you afraid you're not good enough? Or are you feeling less than other people? This might be that your ego is being afraid because it has forgotten that all people have the same value. Okay, we're all broken people. We all need help. Okay, we all struggle in some areas. We're all good in other areas. We all have different talents. Okay, we all need each other in order to live a great life. Are you standing in judgment and seeing yourself as better in some way than other people? And this is ego's way of creating self-esteem, and it's not healthy. Are you creating rationalizations or justifications to allow negative, fear-based emotions to drive your behavior? And this is your ego that can argue that bad behavior is justified to protect you. Do you have to be right or have your way? You know, your ego thinks you do, but the real you might not. Do you need to post things online so others know what you're doing? You know, that might be ego needing validation or attention to feel good enough. You know, try and answer, like, be honest and answer these questions. And it's okay. The one thing I want to tell you is that it's okay. We're not perfect. None of us are perfect. I'm certainly not perfect. And I just showed you an example before of where I screwed up as a coach. But the fact is that if nobody died, number one, if it's not a question of life or death, okay, and nothing serious is happening, then there is nothing to worry about. Everything can be fixed. Everything can be turned into, something can be learned, and we can move on. We can move forward better, with more knowledge, with a better understanding of things, a better understanding of ourselves as well. And that's something that keeps people trapped in this loop. It is self-judgment, self-criticism, you know, and too much self-consciousness, and that judgment will keep you trapped in the loop because you never forgive yourself, and you never realize that everybody faces more or less the same struggles. We all go through the same learning curve in trading. We all go through the same school of hard knocks. Nobody, whether in the professional world or the retail side, is profitable from the get-go and remains profitable and has a great time. Nobody. Is frustrating for everybody. You know, we all go through drawdowns. It's, you know, we all have losses. But the fact is that if you let it go, if you understand it and you let it go, and you forgive yourself, but you try and learn at the same time from these situations, from the losses, and from the, then you will improve. You'll get better. You know, it's not about being perfect. It's about being a bit better than you were yesterday. It's a process. Just like trading is a process, this whole thing that we call life is a process. It's a journey of getting better each and every day. So here's how to keep your ego in check. Don't overthink. Be objective. Okay? Focus on what you see, what you smell, what you hear, what you can feel right now. Then sit back and be aware of the way your current feelings are affecting how you feel inside. Okay? So the idea here is that you have a losing trade. Okay, that's objective. Okay, the market hit your stop loss. End of story. You can analyze that objectively and say, did I follow my process? Yes or no? If I did, well, it's just one of those days. If I didn't, then you have to understand why. Okay? And you go through the learning loop and you come out better. But this is being objective about it, okay? This is analyzing what's happening. It's being in the moment. Instead, people will get mad and they'll say, shoot, you know, this happened to me too. My fiance drew comics of me the way I was behaving many years ago. I think I posted it in some blog posts, but the emotions that are generated from the loss, okay, you have to detach yourself from them, let your consciousness separate from them, because that's the emotional response. And if you're having an emotional response because of loss, the loss isn't just a loss. You're attaching something to it. There's some significance that shouldn't be there. There's some ego in the picture, and you've got to detach yourself from it so you can actually find out what it is. Are you trading too strong? Are you trading too large? Are you looking at the money? Are you afraid of judgment from your spouse, from your friends, from somebody else? Are you trading in a social context and peer pressure is affecting you? Do you have issues being wrong and you feel like you're wrong? You can explore this, but if you don't detach yourself from the emotions that this thing is provoking, then you'll never understand this. And you'll think you have to dominate your emotions or be a superhero, be a Rambo and just, suppress your emotion, or be a Vulcan, suppress your emotions. And that's not healthy, because emotions are part of what we are. We have to, and they will teach us. They tell us something. They're like a warning sign. Something's wrong, and we need to listen to it before it's too late. So the concept of being objective and detaching yourself from the emotions is exactly like trading what you see, and not trading your preconceived ideas about what's on your charts. Then remember that everything you feel is coming from your perspective or the way you're looking at it. Denise Scholl, who wrote a great book, Market Mind Games. She said, we all wear a pair of glasses, and those glasses are our interpretation of reality. We need to understand that we have an interpretation of reality, and we need to try and take off our glasses as much as possible, or at least polish them, to make sure that we're seeing reality as objectively as possible, and not seeing it distorted, not interpreting it. And the common example for this is, a guy with his buddies at the bar. Sort of glances behind his shoulder and sees a table of girls, and one of them is looking his way and is sort of laughing. So, the insecure guy will interpret that as, she's laughing at me. Am I overweight? Am I drinking too much? Do I have a beer mustache? Is my hair looking stupid? Etc. The secure person, the macho man, will interpret this as, wow, she's really into me. Look at that. She's looking straight at me. That's the Johnny Bravo kind of thing. Whereas the objective person will realize that, number one, he wasn't really interested. He just casually looked over his shoulder and caught that. So he'll probably look the other way to see if she is actually looking at anybody else or anything else. And he'll probably find out that she was looking at a friend of hers coming out of the bathroom, or, who was at the bar ordering something. So this is a simple example to show you how easy it is to get distracted. Remind yourself that the classroom of life, the school of hard knocks, brings you the experiences that help you grow if you use them, if you don't take them personally, if you actually understand that they're there for you. No person, no situation can ruin your journey or take from that the quality of your life, unless it's part of your perfect classroom to have that experience. What I'd like to add here is that it is sometimes very difficult. There are some people, I know that one person cannot ruin your journey if you learn the lesson. We can't remain in a toxic situation if it's ruining our lives. From case study number 3, there was that couple that dove into trading without having any proof, and that dove into trading for years, wasting almost all of their savings and ruining their life, ruining their marriage. They weren't prepared to learn the lesson, and there was judgment, and there was frustration, and there was criticism of one another. The lesson there was staring them in the face. Trading is not working for you. You have no proof, and you never had proof that trading was working for you. Stare reality in the face. If you find yourself, if like them, you find yourself going around in circles and and seeing the same situation present itself time after time and dragging you back into a hole, then you're not learning the lesson. So either you're not trying to learn the lesson, or the lesson is painful and you don't want to learn the lesson. But we need to push through it. We need to grow through that pain. Okay? So just know that. And that's why I tell people, for example, in trading, give yourself a predetermined time to prove that you can do this, that it works for you. Okay? That could be 1 or 2 years, depending on where you are in your journey, and starting and get help immediately so that you can get to a point where you know how to trade and you can actually understand whether you like it or not. That's, people just chase after this thing for years. And anyway, going forward, then give up jealousy of others. Each one of us has our own path to walk. We're not all, Bill Gates. We're not all, who's another more recent millionaire? I don't keep track of them, so I don't know. We're not all movie stars. We're not all Leonardo DiCaprio. If the world were full of leaders, there wouldn't be any workers to do the work. We need leaders. We need strategists. We need managers. We need coaches to help people get through the limits. We need normal day-to-day workers that will actually roll up their sleeves and do the jobs. And we need this in every aspect of life. The world needs a whole bunch of different kinds of people to work. So, I know robots are replacing certain types of people, but this has been happening all through history. It's nothing new. Okay. Yeah. Thanks for the Jeff Bezos and Elon Musk. So, we're not all these guys, and usually these people have particular situations that allowed them to be where they are. The American dream isn't really the kind of thing you should be looking at as an example. You should be looking at dealing the cards that life has given to you in the best way possible. Each one of us comes from a different background. It's very difficult for a person that's born in let's say Nigeria to come to Europe or move to America and become a self-made millionaire. It could happen, but it's just very difficult. Starting situation does ground us. It does set some boundaries, and we can break free of them. But in today's world, with rules, regulations, taxes, etc., it's not easy. Does that mean that you should abandon all hope? Absolutely not. That's why we can change our reality. We can forge our reality around us. And I'll give you an example. Example is, for example, my fiance has a bunch of friends that back in the day were doing certain things. Now she's moved on. My fiance has moved on, of course. We're living a different kind of life. We're both involved in different things. I say reasonably successful, but those other people are still doing what they were doing back then. So, you can change your condition. You can change your reality, but aspire to be the best that you can be. Learn about yourself. Learn about who you are and what your gifts are and what your talents are. Don't look at others. Don't be jealous of others and what they have, because what they have might not be what you need to feel good or to live the great life that you can live. It's useless. It really is useless to compare yourself with others. It's more useful to learn from others that are on the same path that you're on and that are doing the same things that you feel like you can do or that you would like to do. And you can learn from them, learn from people that are further ahead, and surround yourself with people that are better than you. But not because you want to be them, but because you want to learn from them. It's different there. So also give up all judgment. So give up jealousy, but give up judgment of others. Okay, that's your ego that tells you need to judge others to feel good. Instead, just let it be. Let everybody be on their perfect journey, wherever they are. And remember that we all have the same value. We're all born equal. No one is superior. No one's inferior. We're just different strengths, different weaknesses. This is how you can evaluate people accurately without ego. Ask questions and listen more than you talk. Set aside your own ego and just listen. And this is tough to do, but we need to listen. The more you listen, the more you learn. It's that simple. And then avoid the need to post everything you do online. I actually took down Facebook. I used to have Facebook. I took it down. I hardly post on Twitter. I just keep it up because Twitter is a useful tool for business. But I don't post on social media. Don't need to. I've got enough stuff going on in my own life. I don't have time to sit down and post on social media. So, plus people are becoming stupid posting on social media and looking at, and social media just generates all of those negative feelings of jealousy of, looking at other people, what they're doing. Oh, look, my best friend's just got a new car or got a new house. Oh, look. And plus everybody posts only the beautiful moments of their lives. Nobody posts, their difficult moments of the day-to-day work or sitting at their desk doing their day job or inserting numbers into an Excel spreadsheet. All of that is just discarded. So it's not realistic. So, trader assessment. This is for you who want to be a trader, and it's making sure that you do want to be a trader. So some questions to ask. What attracts you to trading? And you should be able to answer this. What do you like about the markets? And you should be able to answer this. And how do you stay in touch with international developments? These are 3 key questions if you want to be a trader. How much risk capital do you have? How much time each day can you dedicate to the markets? And are you in a stable financial situation? This is an objective evaluation of your personal situation. How convenient, actually the right way to say it is, how well can trading fit into your lifestyle? How easy it is, how easy is it for you to transition into being a trader? And then, for those of you who have a trading system already or are working on a trading system, how do you identify your trading ideas? Because there's a difference between trading ideas and setups. A trade idea is, for example, we're going into Powell this afternoon, so we're playing the dollar. Powell could possibly be dovish, more conservative, so we might be looking for dollar weakness. If we're looking for dollar weakness, okay, that's an idea, dollar weakness. Then what do we do? Well, we could scan all the major pairs, and we could also look at equities. What are they doing? Is anything looking good or appealing? So we keep an eye on that. And then after Powell, based on what happens, we can execute. Okay, so how do you identify the trading ideas? How do you execute these ideas? And then how do you manage these ideas? And then how do you review your performance? And what steps do you take to improve your performance or overcome your issues? Are you keeping a journal? Are you keeping track of what your issues are? What are your key performance indicators? Your max drawdown, your MAR ratio, recovery time, Sharpe ratio or SQN. What is your expectancy, average win, average loss? Even a free thing like MyFX book will help you keep track of these. But the key is to measure your system. Measure your trading. Make sure you know what the numbers that you're producing and how you're doing, because these will give you hints. These will tell you what you need to work on. So now a little lesson on longevity, and this comes from me. I've been operating the London Open signals initially in collaboration with Steve from 3C Analysis, and then solo since 2016. So I started in 2016 when I came on the team, and I'd like to talk to you about what happened going through the biggest drawdown that we had. So this drawdown here, what happened? Well, objectively, market conditions had changed, volatility had increased, and it wasn't fitting with the way we were trading up to then. There were some changes in the actual trading model that I wanted to make. It was actually more in the risk management and the position sizing side that I wanted to change. But for a long time we couldn't, because that meant making radical changes to something that had gone very well up to then. So before making those radical changes, I did the main things that I could do to limit the damage up to then while we were investigating. So I cut position size, I cut trade frequency, and then enforced a data-driven review. So we did a very long review of with a client of ours who's quite skillful with Excel, and we went through hours of testing and simulation and analysis to see what was going on. And at the end of the day, the only thing that made sense was to radically change the things that initially stuck out, which were, the risk management of the trades and the position sizing, and also I'd say maintaining that lower trade frequency. So because it allowed me to be more selective. So that's what we changed, and it was a long period. This was a number of months. It was basically a year, almost a year, that our clients had to sit through. But we went through all of this, and and the way that we survived the drawdown. And the main takeaway for you is, how do you survive drawdowns? Well, the first things are cut your position size and cut your trade frequency, because you need to understand, you need to be in a position to not be emotionally swamped, not to be emotionally charged, and you can sit back, relax, and analyze what is going on. Is it me? Is it the market? Is it something else? So we did that, and we came out of it, and when our performance has been stellar. But then I got tired, because doing all of this, going through all of this, plus running everything else around the business, and in my personal life, etc., it took a large toll on me. And this drawdown that I'm now coming out of was fatigue. This was me. Nothing had changed in the markets, because the system is adapted now to the markets. Nothing has changed with my process. It's just me. I'm fatigued, and so I'm not making the best decisions. I haven't been making the best decisions up until recently. I've been able to coach myself out of this a little bit, even though I just came down with a big virus and I've been sick for the past 4 days. But it's fatigue. So this is the other lesson for you. When we talk about longevity, it's about structuring a process that will help you be consistent throughout time. And it's about understanding what your limits are. There's a lot of the self-help books and a lot of the gurus out there and coaches and stuff. They will push you too hard. They will tell you that you need to have objectives for your fitness shape. You need to have objectives for your work, objectives for your life, etc. And goals and this and that. But the fact is that if you try to keep up with all that, then you will be fatigued and things will start falling apart very quickly. So understand the demands of each aspect of your life and understand what your limits are. And for example, what I've learned is that, I can't push myself physically doing this job. This job takes a large amount of mental resources from me. Partially because it's about multitasking, partially because it's concentration and deep focus when you're trading. Then I write blog posts and manage other parts. It takes a large chunk of my mental energy. And when I've noticed this, because when I started really paying attention, I noticed that I can jog. Sometimes I go on a fasted jog in the morning before I sit down to work. And in the mornings, even though I have, I'm doing it without having any breakfast or having any energy in me, I can jog and jog and jog, and I can get into that pace where I get into the aerobic pace, and I can go on forever. It seems, you get into that pace where it's working. You get a nice workout. When I try to do it after I have been working for 3 hours, when I do it before lunch, I can't get into that state. My body physically will not allow me to get into that state. I can walk, but I can't jog. That's the kind of fatigue that I've noticed that this thing is placing on me. So but that's just an example, and that's just me after many years of this. So what I'm saying is be aware of the challenges of the amount of energy that your daily routine is requesting, is demanding. Now, in the coaching specialization that I'm taking, I will be specialized in high performance. So in reorganizing nutrition and fitness and lifestyle and all of that. And having gone through it, I can empathize with it and I can help you get out of it. But just be aware of it. Trading, being consistent and lasting for more than a season in the markets is as much about managing yourself and your lifestyle as it is about having a proven process in your trading. And that's what I just like to convey with this. So you need to know yourself. That's why people say, know yourself and know the markets. And that's when you can become a winning trader for a long time. So here's some parting thoughts. This is a bit of an active question checklist. And it goes back to avoiding ego and avoiding wrong objectives and keeping you focused on the things that really matter. So, just answer these questions and say, did I do my best today to be happy? Did I do my best today to find meaning? Did I do my best today to be fully engaged? Did I do my best today to make progress in my trading? Did I do my best today to make progress on achieving my goals? Write down everything that's important to you. Did I do my best today to stay in shape? Because by saying doing my best, automatically, doing my best means that there isn't a preconceived high watermark. There isn't a preconceived objective. It's just whatever of everything that I was able to do today, with the amount of energy I could do today, that I had today. Did I do my best? Because we're not 100% every day. Some days we're 120%. Some days we're 80%. Some days we're sick, just like me when I was these past few days. And my best, having a 40-degree fever, was getting up and getting into a cold shower. That was my best, and I was, it was tough. It depends on your condition, but as long as we're doing our best and we are continuing to do that each and every day, we're following up with it each and every day. You can print out the checklist and put it on the wall in front of you. Just make sure that each and every day you're monitoring yourself and you're keeping track of it, because most people fail at this. Most people fail at follow through. They'll do it for a week, maybe a week and a half, and then they'll stop. But we know from studies that it takes about 3 weeks to form a new habit. So if you can keep up with this checklist for 3 weeks and you start noticing the difference, then you'll probably continue in some fashion, and you'll see differences, and change will happen. But ask yourself these questions. These are active questions. They're meaningful questions. Make sure that you add to the list anything that's really significant to you, and follow through with it each and every day. Did I do my best? Because this way you're focusing on the only thing that you can change and the only thing that does matter, me, which yourself. You can't control the markets. You can't control the weather. You can't control me. You can't control the business. You can't control what other people think. You can only control yourself. So this puts you back in the driver's seat of your own life, of your own trading, of your own actions. And it goes back to that whole conversation of consciousness that we had before. So if you feel stuck, if you feel the need to change something in your trading, I can't think of a better time to get started on the right path than right now. So if anything that I said today has resonated with you, just get in touch. You might not be in the right moment for coaching or for going through a workshop or something, but we can have a conversation. That's free. Asking questions, getting in touch, that's free. We're here to help. So just get in touch wherever you are. If you're on your journey right now, if anything of what we said has resonated with you, then just get in touch and let's try and get you to a better place. And for those of you that do want to take a step of faith, then come to FX Renew, come to our FX Renew pathway, because we are running a special offer, and this will be lasting until this Sunday. So, get onto the webinar page, fxrenew.com/webinar-offer. Take a look at the offering, take a look at our feedback page, and take the plunge. So now I'm open to any other questions before we wrap this up. Okay, so Fausto is saying, thank you for the compliments, Fausto. So regarding European data, how do we get an idea of where either the Euro Swissy or the pound is going, and where do we look? Well, that's fairly simple. Do you read any bank sheets? We have a variety of bank sheets in our resource section. Just read a bank sheet at the end of each week, and then either stay in touch with our dealing room, where we have our morning reports and news feed. But all you have to do is read. Just read. The bank sheets talk about the same themes, because most analysts talk to each other. So you can find that information from there. And where the markets are going, well, that will depend. That doesn't just depend on the data. That depends also on how the market's going to interpret that data, and what consensus is, and what hits the market, whether the market's surprised, etc. The starting point. I've written blog posts on this. If you scroll through the blog, talking about news trades, you can find bits and pieces on this. Otherwise, this is covered in the fundamentals course. It's covered in our fundamental, what's it called again? Our tripwire, the news trade identification plan. But at the end of the day, what to do with this information is up to you and your trading plan. Okay, nobody is going to tell you where the market's going to go, because nobody knows. But what a trading plan helps you do is react and do something based on what the market does. So I've given you a vague answer, unfortunately, but the best you can do to understand the data is go through those blog posts and those courses that we've put together for that reason. How to react to that data? Well, I've put that in there as well, but you'll have to massage it. You'll have to work with it. So Cedric talks about scalping. I actively discourage people from scalping. And I know this is a personal conviction that I'm smacking on you, and I know that I have no right to actually I do have a bit of right to smack this on you, because I haven't seen any profitable scalpers in FX. Period. End of story. I haven't seen any. The volatility in FX is such that scalping is really a useless endeavor, useless pursuit, especially on the retail side, because we pay higher spreads. So even if you're paying a pip spread, 1 pip in, 1 pip out, so that's 2 pips, and let's say you make 10, you're paying 20% in terms of spread, for doing that trade, and that means that you have to make 20% per year just to break even. And that's typically what Warren Buffett and the big guys are able to make. Now, I know in trading, we ourselves have traders that make more than 20% per year, but those are experienced traders that are really know their stuff. So scalping is expensive. Scalping is high risk. It's really high risk, and with the volatility conditions and effects, I wouldn't suggest it. But generally speaking, you got to ask yourself, why do you want to scalp? Why scalping? There are so many other sort of better ways, more efficient ways of tackling the markets rather than scalping. So why go down that route? Are you looking for activity? Are you looking for action? Are you looking for those? Are you stimulating emotions? Is it because you're looking for something and you're translating that into scalping, or is it because your mindset is intuitive? You're an intuitive person, and you don't like sitting through things. And you have to understand whether it's one or the other first, and then you can find the appropriate markets for doing that. You need to find more volatile markets if you do want to scalp, but you also have to make sure that you've got a system that's working for you. I would first investigate with you what this scalping thing is about, and just to make sure, because all the scalpers I've seen have gotten into trouble because it is a very expensive way of trading, and being expensive means that it is a difficult business proposition. Okay, it doesn't really make sense. So I need to explore this with you before saying something like that. That's real world. How long did it take me to realize that it was fatigue, Alan? It's a good question. I'm thinking back on this. I've been aware of it, but I think it took me a couple of months to realize that it really was me. Because if I had just been trading, okay, I wouldn't have suffered that much, and I would have caught on to any fatigue much earlier. But with everything that was happening, it was much more difficult for me to realize that. So so that's, it took me a couple of months to actually realize it was me, and it took me even longer to find a solution, because you don't find, the typical solution is have a holiday, go somewhere, have a holiday, detach from the markets. If you're running a business and you don't have anybody else to substitute you, that's sort of difficult, right? So I had to battle it out in some other fashion. Abdul Hadi said, okay, if you're on the pathway, Abdul Hadi, write me an email. If you don't know how to use it, please write me an email, okay? I'll get you started. I'll get you on the right path. The bank sheets, Fausto, are actually on our resource page. If you Google FX Renew resources, or if you come onto our site and you scroll down, you go onto the resource page, you'll find it. It's there's a page we have called Forex Resources. I think I can actually post this thing in here. I think everybody should be able to see that answer in the question box. Mimi, I don't understand that question, unfortunately. Okay, well, Cedric, yeah, if it's trading on those intraday frames, I myself use the intraday frames to time entries, but the entries are taken from a combination of time frames. We can work on this, but answering this in a webinar is effectively difficult. I hope you understand that. I'd much prefer if you were to write me an email explaining things more in detail, and then we can decide what to do. So, risk reward 1 to 2. Is this the best way? No. Risk reward, Kadir, you should push your risk reward as much as possible. It should be multiple R's if possible. Not all systems can have multiple R's. Trend following systems are the ones that usually have multiple R's. Range bound or mean reversion systems usually have more conservative risk reward ratios, but they still have to be above 1. They should still be above 1, because if you're not making at least as much as you're risking, then your whole equity curve hinges on your hit rate, on the amount, on your win rate. And that's not a good position to be in, because that means that you actually are pressured to win as many trades as possible. And that doesn't work. You can go back onto our blog, and I've written about this so many times. Brian, thank you for stopping by. Yeah, swing trading. I got some questions here on different ways of trading. There are so many different ways of trading, and which one is best? The best one is whatever works for you. So how do you go and find that? You got to find out about yourself and what kind of person you are, and we can do that through. You can do it yourself. You can search personality tests. Even Brett Steenbarger on his blog, he's got a great blog full of resources, and just go and find some personality tests and find out about yourself. The more aware you are about yourself, the more you'll understand what kind of trader you can be. Your strengths should be translated over to the markets. But before all that, the thing that I would suggest is make sure that you actually love the markets. Make sure you actually love trading, or you love the markets, or you're actually interested. You can't do this for the money. You can't do this for the independence. You can't do this for your family. You can't do this for the status. It won't work any more than I could be a bread baker. Actually, maybe I could be a bread baker, because I do cook a lot. I couldn't be a mechanic because I'm just not interested. I couldn't be a programmer. Geez, programming puts me to sleep. Okay, you could say you can be a multi-millionaire being a programmer. I'm sorry, I'll be poor my whole life because I can't program. But I'll find meaning in whatever I do, because that's me. That's what I can do. Do we use any computer systems? Yeah, what I have done actually is I've made almost everything I do systematic, and to overcome my own fatigue. But the first thing, the most important thing to overcome my fatigue was in my own lifestyle. It's like I've had to really limit my energy expenditure. So what I've done is I started creating a team, and I've started. The expansion of the Affectionate team has come from this push to delegate and to get others that are capable and that are willing to lend a hand, and they're very rare in the markets. So I'm very, very fortunate to have those people on the team, and to be able to depend on them. So the first thing was creating a team, and it actually put into process the whole evolution of our business. We wouldn't be pushing, we wouldn't be where we are today and creating the projects that we are right now if we hadn't gone through these steps. So once again, the school of life, or God or something pushed me through a situation, and I had to grow through it. And the steps that I took to exit the situation are actually transforming our business and making things better. So the first thing was me having to delegate more, releasing more time, making sure that my mindset remains as positive as possible, having good sleep, making sure that I sleep enough, making sure that I don't overexert myself or I don't pressure myself in other areas of my life. A lot of it has to do with energy, because if you can't take a break, then you need to find recovery somewhere during the day, and then make sure that you can enjoy yourself during the day. So you have laughter, if you have social interaction, or you have laughter, you like watching funny movies or funny videos on YouTube. Laughter does a lot to generate the right kind of hormones that help you with the recovery. And then yes, on the technical side, there was systemizing what I do. It's still a work in progress, basically, but I'm 80% there. And it's taken off a large amount of work, and plus it's made everything systematic, so it's much more measurable and much easier now. But yeah, those are steps that we've taken. Those steps that I've taken. And Abdul Hadi, do I use a paid newsfeed service? Personally, yes. But for the average retail trader, you don't need it. All you need is what we do for you in the dealing room, keeping you abreast of the main drivers, what is affecting the markets each day, and the matters that matter. I don't advise trading the news. That is the last thing that you should actually try to do. You should have other models to work from first. Cedric, no, the $319 offer, it locks you in for life. So, that is a recurring subscription, and if you lock it in this year, then you always pay the same. Yeah, Kadir, you really need to send me an email, okay? And you really need to calm down. I remember now the series of emails we've gone through together. Okay, you really need to calm down. Send me an email. Okay, last call for questions. Otherwise, we'll wrap this up. All right, 3, 2, 1, end. Oh, here we go. Right on the next time. Do you find it easier to analyze other people's problems than your own? Everybody finds it easier to look at other people's problems, Alan. It's just human nature. And that's why people need help. That's why we all need help. Because when we are involved, when we are, in the grind, in the daily grind, it is very difficult to be in the daily grind and to also detach yourself from the grind, where you can see it from above and see what's going on. Now, I'm very fortunate because I have a fiance who is very good at this. She's like a strategist, and she helps me with this. So she sort of coaches me on this, and I try to coach her on this. And so I'm fortunate from this point of view, but we all need help to see our own issues, difficulties, and challenges, because we often get caught up in the grind and don't see the forest for the trees. The way you get better doing this is doing something like Ray Dalio told us to do in his book. In the morning, it's a practice which I do in the morning. When you get up in the morning, don't get up and run to work. When you wake up in the morning, you might have to wake up a bit earlier to do this, but wake up, and the first thing is breathe deeply and be mindful, or practice gratitude, or pray, or meditate for at least 5 or 10 minutes. Get your mind into a peaceful state, and that way, usually the juices will start flowing, and you can start thinking calmly about your day. And then the next thing is to either have a brisk walk, a short jog, or a stretching session for another 15, 20 minutes. And that way you wake up the body. And the third step is to then take out your agenda and plan your day. And this is how you can start your day on the best foot possible, because you're not leaping into the confusion. You're not jumping into traffic. You're actually overseeing it first. Yep. I'm glad it was helpful. All right, guys, we've been going on for a long time, and I've got to put something on for lunch. So I'm going to wrap this up. Thank you all for the interaction. That's what makes these webinars special. If you have any further questions, please write to me or write to our normal email, hello@fxrenew.com or justin@fxrenew.com. I'm always here to help. So let me know. And thank you for taking the time out of your day to listen to me yap away again. It's always a pleasure. It's an honor. All right. I'll see you next time. And, please, if you feel like taking the plunge, take advantage of our offer today. It's, it really is, it's a great discount. And we really have some stuff boiling in the pot that we're going to roll out in 2019. So yeah, I look forward to seeing you inside the trading tribe. Talk to you soon, guys. Over and out.